and welcome to Market Pulse on News Central in partnership with Nairametrics. I am Joanna Mustapha, your host, bringing you a comprehensive breakdown of market activities, today being the first market day of the week. On the show today, we're 2 days out from the August 1st protest. Will this impact the NGX and mirror what's happening on the NSE? As well, Ethiopia's central bank has floated its currency as part of reforms to get $10.7 billion in external financing help from the IMF, the World Bank, and other creditors. So we'll see what's happening there. And Nigeria's windfall tax is seen spooking investors. Banking stocks are falling to the lowest level in months last week. And that's something we're going to explore on the show today. But first, will this be the week the NGX rebounds? Let's see how Monday's markets moved on the NGX. The simple answer is no, not a rebound. We're still in the red. The all-share index down 0.07%, 98,133.15. That's what we are seeing. And it's at the lowest it has been since May 27th. And, the bearish run obviously continuing. The market has declined marginally. Top gainers, we're seeing Africa Prudential. That was the top gainer with a 10% gain. And of course, we had Critics Eterna. Oando seems to have cemented a place on the top gainer of recent. We can see its share price going up 9.83%. And so, that's a stock definitely catching our eye. Oando PLC, which has been on a bullish ride since we entered the second half of this year. Month to date, Oando has gained about 49%, and year to date, it has appreciated by 113%. Definitely a stock to look out for. Coming to top losers, we see Caverton with a 10% decline. Share price down to ₦1.35. Wapik Insurance as well down to 78 kobo. And of course, we're seeing a lot happening there. However, we've seen another Dangote, company as well posting massive losses. That is the National Salt Company. We can see it there, bottom of the top losers list, going down 4.85%. When we come to top movers, we're seeing the banking stock once again dominating. Are we seeing some sort of, fight back here? UBA First Bank and Access Bank topping the top movers list as well, and GTCO up there at the bottom of the top movers list. So some activity in that regard. Currency markets. The Naira has fallen to its lowest level in over 2 months, according to midday trading data. However, we've seen the Kenyan shilling as well reaching its best point this year. Recall that the Kenyan shilling was the best performing currency for H1, so we'll see what's happening in H2 as well. Apparently, this performance spilled over into the Nairobi Securities Exchange. We'll see that much later on. Now, joining me for the market breakdown after this break is the founder and CEO of Nairametrics, Ugodre Obi Chuckwu. So stay tuned for that. You're tuned into Market Pulse. Joining me now is Ugodre Obi Chuckwu, the founder and the CEO of Nairametrics. It's a pleasure to have you in. All right, hopefully we can, get your audio up in just a bit, but I'm sure you can hear me. And let's begin with the NGX staying in the red. It was in the red all week, with investors digesting interest rate hikes, economic data, amongst other news within the investment space over the past couple of weeks. Do you expect this bearish trend to drag on into this new week, even though we have seen, from today's markets, we've seen that happen?
Well, we've already seen today start with, is it a 1.9% loss? So pretty likely that we could be in the middle of another bearish week. July is usually one of those months where the market can be a little bit elusive. We've seen over the last 5 years, I think July has lost, we've seen July end with losses twice in the last 5 years, while it's gained 3 times. So this is the 6th year. So maybe perhaps this could be a month of losses for July. So I'm not going to be surprised if we end this week another bearish week. July ends, I think, on Wednesday. And so I'm sure investors have one eye at that, probably wondering if perhaps a lot of the negative news that have hit the market in recent days could be weighing on their mind. And I kind of suspect that is what is going on. So I wouldn't be surprised, Joanna, if we end this week on another bearish note.
All right. Let's come now. Obviously, it's earning results season. Companies appear to be showing some form of resilience despite, the current challenges. I can't begin to name them, inflation and so on and so forth. But can we expect some of these earnings to perhaps lift the equities markets? And which stocks do you rate as being able to do so?
I wish. But you know what? The Nigerian stock market historically, don't necessarily go in line with fundamentals. So you could have stocks actually do well on a fundamental level, but the market tends to react a bit differently. What tends to usually drive stock market performance is all liquidity and where investors think they're going to find gains or perhaps losses. But we have seen amazing results last week, even as much as some of it has been a mixed bag, but we've seen some good results. I think Transcorp Hotels and Transcorp Power did surprise me with solid numbers. We also saw solid numbers as well from Okomu Oil. They did hit impressive numbers as well. FCMB was also the first bank out of the block ahead of their planned public offer. They also did good numbers as well. And then we also had the likes of Airtel, Cadbury, and Guinness also struggled a little bit. We all know why that is happening. FX losses did affect their numbers. And Dangote Cement also did blistering well, almost hitting 2 trillion in revenues in the first half of this year alone. Yet, investors still gave Dangote Cement a 9% loss last week, and not really sure how well that fares this week. So, in a nutshell, investors don't necessarily react positively to fundamentals. They don't really it doesn't really matter whether the stocks does well or not. What they do tend to react to is just where they think gains and losses would be, and more importantly, dividends. And from what we saw last week, not a lot of companies declared dividend, even though Transcorp Power was a bit of a departure from that. They did declare, announce that they were planning to give out dividend. Nevertheless, their share price also dipped slightly last week. So, Joanna, never really trust fundamentals when it comes to Nigerian equities market. But what we know is that, look, just fundamentals on the long run tend to always succeed. They tend to always pay off. And so when you find stocks that have solid fundamentals, you want to go for them. For my own personal picks, I'll just leave that as a secret for now.
All right. I will keep our eyes out for that. But there are also concerns. The big story, of course, is the protest. There are concerns in the week ahead of the planned protest and its potential impact on an already bearish market. We've seen the grip the bears have had on, the NSE with their unrest and protests. Do you share similar concerns for the NGX?
Yeah, well, yes, but to be honest, I don't think that protests would necessarily affect the NGX that much. Let's remember that a lot of the transactions on the NGX typically happen remotely these days. Most stockbrokers actually transact from the comfort of their homes or their offices. They no longer go to the exchange. So I don't think that's going to have that much of an effect. And then, secondly, a lot of the activity on the stock market is mostly domestic driven and not necessarily foreign investor driven, because you would have thought maybe foreign investors may have or may be a little bit apprehensive and might not want to trade. So I'm not really sure that you're going to see that much effect. However, there could be a little bit of dip in volume of trade as investors start to get wary, but nothing significant, Joanna. I think that market is just going to go on as normal.
All right, fair enough. We know that there's some uncertainty that comes with protests. Perhaps that will not affect investors. Let's move now to the Horn of Africa, Ethiopia, where today their central bank floated the country's birr currency against the US dollar. And yes, it has started a slump, right? 30% down against the dollar. It's now a market-based foreign exchange regime with expectations that, that move will secure IMF support and make progress on a long-delayed debt restructuring. You've spoken on emerging economies taking on IMF recommendation and advice and damning the consequences on local economy. What do you make of this move? Do you see that being the case here in Ethiopia?
Well, I mean, not really sure if that's the case, but I mean, Ethiopia is going through, difficult economic challenges, and so no surprises here, them having to agree to float their currency. If you want to take IMF money, then you've got to be able to dance to IMF tune, and so most of the countries that have taken IMF money have also ended up depreciating or floating their currency. Case in point, Ghana. Ghana did the same thing as well. And so that is what is happening in Ethiopia. So no surprises there that they've gotten the 30% hit. The citizens of the country or the businesses in the country seem to like that move. They seem to like it because they sort of experienced the same thing we experienced last year and 2 years ago, where there were a lot of capital controls and there was a huge disparity between their official rate and the black market rate. And so it was very difficult for businesses to get access to Forex. But now with this deal in place, Ethiopia expects to get $10 billion, and they believe that that would at least help with their FX liquidity issues. And so they seem to like the idea. But hey, I hope they know what's coming for them with the 30% devaluation on the first day. That might not be the end of it. It's probably likely that they could get a bit more depreciation until the currency kind of finds its level. Expect demand to also rise there as well, because a lot of pent-up demand has built up over the months since when they had the capital controls in place. So expect inflation to also spike there. I just hope that Ethiopia is also paying a very solid attention to what happened in Kenya. And you got to be very careful with how you push these reforms in, Joanna.
Right. Proceed with caution, pretty much. Before I let you go, let's delve into the crypto world a bit, right? With Trump and his now pro-crypto agenda, he pledged at the weekend Bitcoin conference to make the US the crypto capital of the planet and, the Bitcoin superpower if he returns to the White House. When he was in the White House for his first term, he considered crypto a crime-riddled scam and pretty much delegitimized the asset. What's your assessment of this unfolding dynamic and his U-turn on crypto?
Money, 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 money. Follow the money, Joanna. So that's exactly what's going on here. It's a very, very different political climate now that Kamala Harris is competing against Trump. And so Trump purely understands that, look, if you're going to compete head-on with Kamala, then you got to be able to raise enough money from donors or from donations. And the crypto industry is swollen with cash. And so Trump knows that it's very important that he sounds the right chord with them. And so that is why he's done a U-turn. 5 years and an impending election can change anybody's mind. It was 5 years ago, so that he was all hell against cryptocurrency, but now he's on for it, and cryptocurrency enthusiasts kind of love it. But what is very interesting about what he said was that he was going to make America the cryptocurrency of the world, essentially saying that we're going to keep, I think, did he say about 8 million or so Bitcoins as what he plans to keep? I don't know how possible that is, because a lot of the Bitcoins that America has as a country is actually Bitcoins that they seized from scams. And so I guess he's saying that he wants that to be a benchmark or a stepping stone for what he intends to do in terms of sort of amassing crypto as some kind of reserve for the US. Funny enough, Trump didn't actually go as far as other candidates who also spoke at the event, because he wasn't the one who spoke at the event. One of the candidates actually did say that he expects them to be buying crypto every month. I think 500,000 units or so of Bitcoins. And so pretty interesting to see the US sound this quarter. Of course, those of us in the crypto industry love it. Bitcoin is already likely to hit 70K. Who knows where it's going to go from here? But as crypto enthusiasts always say, to the moon, Joanna.
To the moon, but there's a lot of volatility in that market. We'll see how everything unfolds, right, with the potential Trump or Kamala presidency. Thank you so much for joining us, Ugodre Obi Chuckwu, the founder and CEO of Nairametrics. It's a pleasure having you in. All right, up next is still Market Pulse. For the record, Bitcoin is now about $4,400 below its record of nearly $74,000 that it hit sometime in March. So we'll see how this all unfolds. Up next, we'll be spotlighting banking stocks. It's been over a week of reactions to the now 70% tax on banks, FX gains. We're going to take a look at how banking stocks have reacted in the past week and today, and more of this after the break with David Olujinmi. With the 70% windfall tax on banks' FX gain, has your appetite for banking stocks shifted? Is it still a buy or a sell or a hold for you? Let us know up on X at Nairametrics. Sell pressures we know are rising nevertheless, as the latest regulation has driven most of the major banking share prices lower. Nearly all major banking stocks incurred losses in the past week. And to provide us with the data and more insight on this, we have David Olujinmi, financial markets analyst with Nairametrics. He joins me now. Hello, David.
Hi, Joanna. How are you doing?
Very well, thank you. All right, provide us with the data on banking stocks performance post-windfall tax announcement, especially the tier 1 banks and those who have commenced recapitalization exercise.
Over the past week, since the announcement was made on July 17, we've seen banking stocks lose about $398 billion in their market capitalization. The NGX banking index declined by about 5.87% since July 17 when the announcement was made till last week Friday. Then some of the top losers, the top decliners, some of the most affected stocks have been, one has been UBA, First Bank, Zenith Bank. UBA lost about 11.4% in just a space of 8 days. We saw Zenith Bank lose about 10%. Then we saw First Bank lose about 10%. We saw Zenith Bank lose about almost 5%. So we've seen that Tier 1 banks have been the most affected by this policy, basically because I think investors believe that these are the banks that made the most from FX gains.
Just the news of it, right? The tax hasn't been fully implemented yet. But the outliers, Fidelity and Stanbic, they remained stable last week. I almost want to fix FCMB in the mix, but you know they declined 0.6%. Is there anything in particular that kept the bears away from these stocks?
So basically, we've seen Fidelity carrying out the right issues and the public offering. We've seen their shares in the secondary market trying to stay afloat of the issue price. So their public offering and right issues is basically going to extend based on whatever resolution they come out with from the extraordinary general meeting. So I'm seeing an extension of that. So that is triggering investors to stay in a Fidelity a little bit longer to ensure that their market prices stay above. They don't want a situation with Access. Access is probably having some issues right now based on the fact that their share price is much lower than the issue price in their right issues. For Stanbic IBTC is quite a very stable stock, has stayed at the 53 mark for quite a while. Even while recapitalization pressures have been on banking stocks, Stanbic has basically just stayed, lost about 6% this year. Then for FCMB, we've seen a situation where they are the first to release half-year results. People are looking at their half-year results. This is a good return. So it's not a situation where we see investors leaving this stock.
We'll see what happens as earning results continue to come in for the banks. Stocks that pay dividends, stocks that give you returns, that serves as a huge incentive for an investor to buy or hold. What impact could these taxes potentially have on dividend payments half year?
Analysts have predicted that this is going to have some effect on the dividend paying ability of this stock. One thing to consider is that these banks have already reported profits. Basically, they've paid their taxes. They've already incurred tax liabilities for last year. This is already July of 2024. They've reported their company income tax. They've paid. Now, the policy is essentially going to affect them in such a way that they will have to probably dig into their retained earnings and come up with the payment. In fact, Moody's was predicting that about 6% of shareholder equity is going to go into the payment of these taxes. So it's definitely going to have an effect on their dividend paying ability. However, Nigerian banks are resilient. This is a high interest rate environment. Banks are basically still doing the same thing they did last year, raking in a lot of money from interest rates, interest income.
Will that resilience carry them through? We're going to have to wait and see. But thank you so much, David Olujinmi, financial markets analyst with Nairametrics. A great breakdown there. Now it's over to you. What are your sentiments towards bank stocks at the moment? Bullish, bearish? Let us know at Nairametrics on X.